Hi there, this is Zanten. Today we're talking about a reopening company that many investors feel could benefit from the rise in inflation and interest rate. Unlike most growth stocks, this company growth isn't affected by rising inflation. As inflation continues to rise, the company could continue to raise the price to offset its costs. Hence, some investors feel that this is a great company. That the company they're talking about is Coca-Cola, more commonly known as Coke. So in today's video, we'll be talking about the reasons why Coke could attract investors to invest in the company. Before I continue, please smash that button. And if you'd like to see more such videos, please subscribe to this channel. Firstly, we'll be talking about the business model of the company. Coke is a carbonated soft drink manufactured by the Coca-Cola Company. Originally marketed as a temperance drink and intended as a patient medicine. It was invented in the late 19th century by John C. Pemberton and was bought over by businessman Isaac G. Keller, whose market tactics led Coca-Cola to the dominance of the world soft drink market throughout the 20th century. The current formula of Coca-Cola remains a trade secret. However, a variety of reported recipes and experimental recreations have been published. The drink has inspired imitators and created a whole classification of soft drinks. The Coca-Cola Company produces concentrates, which is then sold to licensed Coca-Cola bottlers throughout the world. The Coke Company also sells concentrates for soda fountains of major restaurants and food service distributors. Secondly, we'll be talking about the company's favor before the pandemic. Coca-Cola reported quarterly revenue that topped analyst expectation as new products under its namesake brand boosted sales. The beverage giant reported a fiscal fourth quarter net income of $2.07 billion or 47 cents per share, up from $870 million or 20 cents per share in 2019. Excluding impairment charges, franchise gains and other items, Coke earned 44 cents per share, meeting expectation of analysts surveyed by Refinitiv. Net sales rose 16% to $9.07 billion, topping expectation of $8.89 billion. New products such as Coke Plus Coffee and an expansion of Coke Zero Sugar lifted sales during the quarter and led the namesake brand to its best performance in 8 years. As US consumption of soda has fallen, the company has used its Coke brand to create healthier options and branch out into new categories. For example, it launched Coke Energy in the US earlier in 2020. Teas from its Fuzzy brand and coffee also boost its sales. Additionally, Coke said it benefited from an extra day in the quarter and more customers buying higher priced products. Global organic revenue rose 7% during the quarter. North American unit case volume, which strips out the impact of the currency and price hike, was flat for the quarter. Volume in its Europe, Middle East and Africa segments climbed 4%, driven by growth in Nigeria, South Africa, Turkey and Central and Eastern Europe. In Latin America, unit case volume increased by 3%, helped by acquisition in Central America. Next, we'll be talking about the company's plan to return to the Super Bowl before the pandemic. More than 17 billion workers are expected to skip work the day after the Super Bowl, according to a survey commissioned by Kronos. Coca-Cola wants to offer those blurry-eyed folks another alternative, a jolt of caffeine to combat the post-Super Bowl lethargy. Its new advertisement campaign for Coke Energy debuts during the big game to deliver the message. It's a return to the main event for the Atlantean beverage giant, which opted last year for a commercialized that aired before kickoff. Coke will need to walk a fine line when marketing the energy drink. Monster and Red Bull have faced backlash for advertising that appears to target children. The American Agency of Prevention recommend that adolescents should not drink energy drink because of the high caffeine content. US consumption of soda has been declining steadily as health-conscious consumers turn away from sugar. Energy drinks, however, have managed to buck the trend. This creates an opportunity for Coke to combine the strength of its namesake sodas brand with a beverage category that is growing sales. Higher sales of its namesake Coke brand, which includes products like Coke Plus Coffee and Coke Zero Sugar, help the company beat analyst estimates for its fourth quarter revenue. Thirdly, we're talking about how the company fares during the pandemic. Coca-Cola will cut about 2,200 jobs in its global workforce as part of a broader restructuring plan that was accelerated by the pandemic. In the US, Coke will use layoffs and buyouts to eliminate about 1,200 jobs, accounting for about 12% of the workforce in its home market. The news was first reported by the Wall Street Journal. At the end of 2019, the Atlantic-based company had 86,200 global employees, but the pandemic battered its revenue and raised costs for the beverage giant. About half of its sales typically come from consumers drinking its beverage away from home. In the third quarter, its net sales slid 9%. Coke has responded to the crisis by expediting its plan to restructure its business and slim down its portfolio. It has stopped producing drinks such as Tab and Odara brands that do not sell well and do not present many growth opportunities. The company plans to build new operating units focused on the regional and local level that will work closely with 5 global marketing leadership teams divided up by category. Next, we'll be talking about the company's plan to stop advertising its namesake sodas during the Super Bowl a year after it started to return. Coke and PepsiCo will not be promoting their namesake sodas with Super Bowl commercials in 2020. The decade-long rivalry between the two cola brands is often put front and center with dueling advertisements during the annual NFL championship game. But this year, both will sit it out. Variety first reported the news. Pepsi is replacing its traditional Super Bowl and slot with a new campaign to lead into its halftime show at the game featuring The Weeknd. This year marks the 10th anniversary of Pepsi's sponsorship of the Super Bowl halftime show. Both owners of PepsiCo have plans for in-game ads. In a statement to CNBC, Coke said they will be toasting to other brands from the sideline this year. In 2019, it opted to run an ad before the Super Bowl games rather than during. But recently, the beverage giant has been reeling from the impact of the pandemic. Its revenues fell 13% during the first 9 months of 2020 as it missed out on sales at restaurants, gas stations, and office buildings. PepsiCo received a small portion of its sales from away from home occasions. Fourthly, we're talking about the 2020 fourth quarter revenue of the company. Coca-Cola said the pandemic is still hurting its sales, but cost-cutting efforts help it top analyst earning estimates. The company also released its first forecast since the crisis hit its business. Analysts appear to be more optimistic than the soft drink company about the speed of its recovery. The beverage giant reported a fourth quarter net income of $1.46 billion or 34 cents a share, down from $2.04 billion or 47 cents per share earlier. In response to the pandemic, Coke had accelerated its workforce restructuring and slimming down its portfolio. The company recorded a $15 million charge related to these efforts and a $4 million benefit from discontinuing its Odara brand. About 11% of Coke's global jobs have been cut, excluding its bottling investment, and global venture segments. Coke expects to spend 350 million to 550 million on severance. Excluding restructuring changes and other items, Coke earned 47 cents per share, topping the 42 cents per share expected by analysts. Net sales dropped 5% to 8.6 billion, missing expectation of 8.63 billion. Organic revenue, which does not include the impact of acquisition divestitures of foreign currency, fell 3% in the quarter. Coke is expecting organic revenue growth in 2021 in a high single digits and adjusted earnings growth in a range of high single to low double digits. Before announcing its fourth quarter results, analysts were projecting that full year 2021 earnings will grow 10.5% to $2.10. Next, we're talking about the company's biggest source of growth in 2021. The biggest source of growth for Coke over the next few years will likely be the zero sugar version of the company's namesake soda. The drink launched nationwide in 2017 as an updated version of Coke Zero, which was 12 years old at that point. Coke Zero Sugar was meant to resemble the traditional Coke soda more closely, but still appeal to health-conscious consumers by leaving out the sugar. And the product has paid off for the company, fueling sales growth even during the pandemic. CEO Quincy pointed to Coke Topo Chico, Hard Centers, and Ahua Sparkling Water as new products that are doing well in the early days of the launch. Other beverage launch like Coke Energy has been challenged by the current crisis. Executives told analysts on the company's February 10 earnings call that they will double down on Coke Energy this year after lockdown hurt the initial launch earlier last year. Finally, we're talking about the company's latest earnings. Coke reported that quarter's demand was unchanged from a year earlier as North America and Western Europe take longer to bounce back from the pandemic. However, global unit case volume in March returned to 2019 levels. The beverage giant reported a fiscal first quarter net income of 2.25 billion or 52 cents per share, down from 2.78 billion or 64 cents per share earlier. Excluding items, Coke earned 55 cents per share, topping the 50 cents per share expected by analysts. Net sales rose 5% to 9.02 billion, beating expectation of 8.6 billion. Organic revenue grew 6% while unit case volume was flat from a year earlier. Coke said demand improved every month of the quarter, driven by markets like China, where uncertainty tied to the virus has fallen. The company's sparkling soft drink segment, which includes the namesake soda, saw a volume growth of 4% in the quarter. While the North American fountain business is still under pressure, growth in India, China, and Latin America offset those declines. Higher demand in China and India also helps its nutrition, juice, dairy, and plant-based beverage segments, which boosts a 3% volume growth. Coke's hydration, sports, coffee, and tea segments was the hard hits, with its volume shrinking 11%. The coffee business declined 21% during the virus impact on Costa's Cafe. The hydration category, which includes Danny and Smart Water, reported volume decline of 12% as fewer consumers worldwide bought single-use water bottle. Demand for Coke tea products fell 6%, while sport drinks saw volume decline just 1%. The company reiterates its full-year forecast of organic revenue growth in the high single digits and adjusted earnings growth in a range of high single to low double digits. CFO John Murphy told analysts that uncertainty remains. While India and parts of Europe are responding to spike in new COVID-19 cases with lockdowns, while Latin America and Africa are expecting slower vaccine distribution and new wave. CEO echoed that statement. In a separate filing, Coke announced plans for a public listing of Coca-Cola Beverage Africa. The company will sell a portion of its holding in the IPO, which is expected within 18 months. Share will be listed in Esplandem and Johannesburg. Next, we're talking about how the companies plan to combat rising commodity price. Coke will raise price on its drinks to combat the impact of higher commodity costs, its CEO told CNBC. The beverage company joined several other consumer giants such as Kimberly-Clark and J.M. Smucker in hiking price. While the merge will help their profit margin, it may come at the expense of cash-strapped consumers who are still struggling from the economic impact of the pandemic. Throughout the crisis, Coke shifted its production to focus on larger bulk packaging to appeal to consumers who were spending more time at home and stocking up at the grocery store. But before the pandemic, Coke and its rival PepsiCo have been pushing smaller cans and bottles, which usually carry a higher price per ounce for the consumer and are more profitable for the manufacturer. Pepsi executives said that they expect smaller packages to come back as the crisis subsides. Coke CEO did not reveal which Coke products will have higher price tags. The company last announced a price increase in 2018, citing the impact of aluminum tariff under former President Donald Trump's administration. In conclusion, Coke is a stock that investors love. Given that the company does not care if there is rising inflation, the company will continue to grow. Furthermore, the company has been paying dividends for a long time and it's very hard for the company to cut its dividend payment. Hence, many value investors love this name. To me, this company is fine, but I prefer growth stocks. With that, thank you for a nice day. Goodbye.